Bybit CEO questions DEXs risk controls after Hyperliquid ETH liquidation. Bybit. Hyperliquid. Bybit CEO Ben Zhou highlights the vulnerabilities in DEX risk controls following Hyperliquid's $4 million ETH liquidation loss. He advocates for dynamic risk limits to prevent such again. Last updated, March 13, 2025. Journalist. Hassan Shittu. Journalist. Hassan Shittu. About author. Hassan, a cryptonews.com journalist with 6+ years of experience in Web3 journalism, brings deep knowledge across crypto, Web3 gaming, NFTs, and play-to-earn sectors. His work has appeared in Author Profile. Share. Copied. Last updated. March 13, 2025 at 13:24 GMT+2. Why Trust Cryptonews? Cryptonews has covered the cryptocurrency industry topics since 2017, aiming to provide informative insights to our readers. Our journalists and analysts have extensive experience in market analysis and blockchain technologies. We strive to maintain high editorial standards focusing on factual accuracy and balanced reporting across all areas from cryptocurrencies and blockchain projects to industry events, products, and technological developments. Our ongoing presence in the industry reflects our commitment to delivering relevant information in the evolving world of digital assets. Read more about Cryptonews. Bybit CEO Ben Zhou has raised concerns about decentralized exchanges (DEXs) and their risk management mechanisms following a massive Ethereum ETH liquidation on Hyperliquid. The event saw Whale strategically liquidate a 175,000 ETH position with 50x leverage, resulting in a $4 million loss for Hyperliquid's liquidation engine, HLP Vault. Ultimately, the Whale secured a net profit of $1.8 million. Zhou pointed out that both CEXs and DEXs face challenges in managing Whale liquidations. He suggested that while lowering leverage is a short-term solution, it may hurt business by discouraging high-leverage traders. Instead, he proposed alternative risk control measures such as dynamic risk limits and enhanced market surveillance tools. How the Hyperliquid liquidation unfolded. On March 12, an anonymous whale opened a long position worth $340 million on Hyperliquid, leveraging 175,000 ETH at 50x. The trader initially closed 15,000 ETH before withdrawing approximately $17.09 million USDC in margin, reducing their collateral and increasing the liquidation risk. Once the remaining 160,000 ETH position hit its liquidation threshold, Hyperliquid's liquidation engine took over, executing the liquidation at approximately $1,915 per ETH. The HLP Vault, which absorbs liquidated positions, suffered a floating loss exceeding $4 million as it attempted to unwind the position. Hyperliquid later clarified that the loss was not due to a hack or exploit but rather a consequence of the Whale's strategic liquidation. The platform responded by reducing the maximum leverage on BTC and ETH trades to 40x and 25x, respectively, and raising maintenance margin requirements for large positions. Despite the loss, the Whale exited with a $1.8 million profit, demonstrating how high-leverage traders can manipulate liquidation mechanisms to their advantage. Hyperliquid's native token, HYPE, briefly fell by 12% before recovering as concerns over further vault losses subsided. Are DEXs equipped to handle high-leverage trades? This is not the first time a DEX platform has suffered from a similar event. In 2022, GMEX, another DeFi trading platform, experienced a comparable incident where a trader exploited how asset prices were calculated to execute large trades without significantly affecting market prices. The trader extracted between $500,000 and $700,000 in profit, exposing weaknesses in GMX's liquidity model. Given this repeated pattern, Zhou argued that DEXs must rethink their risk controls to continue offering high leverage. He noted that while Hyperliquid's decision to lower leverage may reduce future risks, it does not eliminate the possibility of similar events occurring. One of Zhou's key suggestions was implementing a dynamic risk limit mechanism which adjusts leverage based on position size. Under such a system, large positions would see their leverage automatically reduced, making it harder for traders to manipulate liquidation processes. He noted that in a CX, a position of this size would likely be limited to around 1.5x leverage, significantly lowering systemic risk. However, Zhou acknowledged that traders could circumvent such measures by opening multiple accounts. The lack of Know Your Customer (KYC) requirements on many DEXs allows users to create multiple wallets, spreading their positions across different accounts to maintain higher leverage. To mitigate such risks, Zhou suggested that DEXs consider implementing market surveillance tools similar to those used by CEXs. These could help detect abusive trading behavior such as intentional liquidation triggers and coordinated market manipulation. Additionally, he recommended open interest (OI) limits to prevent individual traders from accumulating disproportionately large positions that could threaten platform stability. For now, Hyperliquid's leverage reduction is a step toward risk mitigation. However, Zhou believes that unless DEXs introduce CX-level risk management tools, they will remain vulnerable to strategic liquidations and potential market exploits. Follow us on Google News. Trending news. Recommended popular crypto topics price predictions. How Tether co-founder William Quigley views crypto regulations in Trump's second term. Trump appoints PayPal veteran David Sachs as White House AI and crypto czar rep. Nick Bejich introduces companion legislation to Senator Cynthia Lummis. Bitcoin Act. German-speaking investors predict significant Bitcoin price surge by 2030. Survey crypto trader warns, move your Pi coins to Pi wallet before March 14th. Altcoin news. U.S. SEC postpones approval decisions for several crypto spot ETFs. 1 day ago. By Sujya Sundararajan. Price analysis. Picoin faces make or break moment. Can it survive the sell-off? 19 hours ago. By Simon Chandler. Altcoin news. Cardano price set for a 50% crash? Watch this key level. 1 day ago. By Joel Frank. Best crypto to buy now in March 2025. Top crypto to invest in. February 19, 2025. By NSS, Tavares. New crypto coins to invest in March 2025. 1 day ago. By NSS, Tavares. 8 best crypto pre-sales to invest in now. Upcoming token sales. March 3, 2025. By Mebkeelikutty. 10 new and upcoming Coinbase listings in March 2025. March 3, 2025. By Elijah Rankovich. 12 new and upcoming Binance listings in 2025. March 3, 2025. By NSS, Tavares. The 12 next cryptocurrencies to explode in 2025 are top picks. September 11, 2024. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2034. October 19, 2024. By Leon Waters. Ripple, XRP, price prediction 2025, 2026 to 2030. August 28, 2024. By Eric Huffman. Ethereum price prediction 2025 to 2030. Will ETH reach $5,000? August 28, 2024. By Ben Beto.